The following is a presentation of TFNN.
We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I will be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go to a Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally and then they tanked the market, and I didn't know whether to reshort at the close. And then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos.
That's great.
Kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again. So,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 21st. How about that, folks? Already August 21st. Boy, time flies by. Next thing we know, it's going to be Thanksgiving. But welcome to the August 21st wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go check out one of our tools. This is the tool I call the Great Challenge of Life. You know, leadership is not about how many followers one has. It's about how many leaders one can create. Now, this is a lesson that each of us can pass down to our kids. And the lesson is this. If you want to be a leader who attracts quality people, the key is to become a person of quality yourself. You see, leadership is the ability to attract someone to the gifts, the skills, the opportunities that you offer as either an owner, a manager, a parent, or a coworker out there. I consider leadership to be the greatest challenge of life. Each of us are leaders. And in the area of trading and investing, most of us are one-man, one-woman armies, and we must learn to lead ourselves. That, folks, that's an important quality. Leaders must be great influencers. And when you're on a one-man army out there, one-woman army out there, learning to influence yourself, well, that is just one of the most useful skills that you will ever acquire. But before you can lead someone, that includes yourself, or better yet, before you can touch someone, you must be touched. If you want to move someone, you must be moved. Each morning, my outcome is to move or touch at least one person out there, whether it's in the area of trading or personal development, and I do this with a passion that is unmatched by most. Now, I teach that which has touched me, and that's called pattern recognition. That's my foundation. Pattern recognition, whether it's in the markets that we trade or pattern recognition that exists within each of us. I love pattern recognition. You know, each of us have patterns. Each of us have rituals. Rituals, patterns, same word really out there. You likely started your morning the same way that I do, with some form of a ritual out there. And we'll do it on an ongoing, consistent basis all day. I don't know about you, but when I put on my pants, it's the same way each day. Left leg in first, followed by the right one. When I put on my tennis shoes after the shows, when I go and I'll take a walk along the beach or what have you, I go ahead and I put my left shoe on first and then my right shoe. We all have rituals which become patterns, and so do the markets that we trade. Now, there is no question in my mind that the greatest challenge in life is leadership, and what's important in leadership is refining our skills. All great leaders keep working on themselves until they become effective, and then all great leaders, they never stop there. They just keep building on their foundation. Leaders continue to feed their mind. As leaders, you and I, we must be strong, but not impolite. We must be kind, but not weak. We must be bold, but not become a bully. We must be humble, but not be timid. We must be proud, but not arrogant. And we must be funny, but not foolish. As leaders, you and I, we must accept life as it is, unique in every facet. For life is unique, and life needs leadership. And this, my friends, this is our greatest challenge in life. So I say just step up today and lead. Let's go check out the leaders in the markets right now. Leaders are leading the way down. We've got the Dow futures off about 34 points. Trade out at 14,951. ES-Mini, S&P futures off 4 points. They're trading at 1646.75. NASDAQ futures down 7. Trading out at 30.74. The Russell 2000 off 10.20, off 10.22. That would be big. They're off about $4, trading out at 10.22. King dollar up 22 ticks, trading out at 81.16. Kind of flat out here in the currency world. Gold is back $8 at 13.64. Silver down 11 pennies at 22.95. Light sweet crude off 10 cents at 105. Our call-in number 877-927-6648. Would love to hear from you. Give us a call. We can take a look at your stock or talk about anything that you would like. If we take a look, see what's going on overseas right now, the DAX is off 9 points. No big deal there. The FTSE formed a hammer candle yesterday, so we'll take a look at that chart for sure. It's down 34 points right now, trading out at 64.18. An interesting bag over in Asia last night. You actually had the Nikkei finish up, and it finished up 27 points, and it held on to that Gartley buy pattern that we were taking a look at yesterday. And that's important. We'll go see if there was a bullish candle that formed, or maybe not, but well, I don't know what candle. I can't recall what candle formed, but we're going to go take a look at it. The Hang Seng was off 152 points, well off of its session lows. It was down much larger than that, finished off about 0.7%. And the the Shanghai was totally flat, down 40 or up 41 cents. Boy, I'll get this straight here. Green means up, red means down. Again, 877-927-6648. Let's start off by taking a look here at the S&P futures. That's what I've got up on my screen. If you're watching us on TigerTV, thanks so much for doing that. Maybe you're listening on the radio or your mobile device at TFNN.mobi. Remember, you can always catch the live stream of this by going to the homepage of TFNN.com with your smartphone, your pad device, what have you. Go over to the right-hand side. You'll see that button, 3 little smartphones. Click on that. This show will stream live, and you can get the archive on Channel 9 as well. Now, we're looking at the ES-Mini. It's trading out at 1645.50. What is it doing? What did we do yesterday? Well, the candle that formed yesterday, that's referred to as a piercing candle out there. It is a bullish candle that sets up now support, and support would be a close below yesterday's low, which is 1641. So right now, what we can see here is that the bulls are attempting to really support the market. Now, there's a couple of patterns out here. Number one, you can take a look at the retracement off of the June 24th low. That's 1553 and a quarter. That's the low that came in. And if you go all the way up to the high that was placed on August the 5th, that level, 1705. If you go from the low to the high, you'll see that where prices move to the first level of that escalator on the way down, the 0.382 retracement level. The actual 0.382 retracement, 1647. We're trading at 1646 right now. So it's right in that area. Well, we can see also, because enough days have elapsed, we can see this little downtrend channel. Obviously, the market's been moving down. Now what it has formed is a downtrend channel. And how do we know it's a downtrend channel? Because what we're looking for is the largest number of co-located opens and closes. That means it can be an open or it can be a close. You like to have at least 3 of those. Well, if we take a look at the top portion of the downtrend channel, that's pretty easy, because you're going to start off with that little spinning top candle on August the 5th. The open out there was 1702.75. Your next touch point is going to be the candle on the following session on August the 6th. That open was 1701 and a quarter. That happens to touch the high that came in, well, not the high, but the open of August the 14th, and that was at 1691.50. So that becomes, now we're not taking a look at the wicks, we're just taking a look at the bodies of the candle, the essence of price. So that becomes our top line. You've got a parallel line that is on the bottom side, and on the bottom side, you're basically using the close of July 18th, the open of July 19th out there, and then really you're using the open of yesterday's candle, and that was at 1644. That gives us our 3 touch points on the top, 3 touch points on the bottom. So what we can see here is price has basically moved into an area of support. Now the question is going to be, is there going to be any kind of a bounce? Well, the answer to that is, and where it can go is, I'll give you the number today. If in fact the ES Mini closes above, not yesterday's candle, yesterday's candle was a bullish candle, and that really set up our support. But if you see it close today above the level of August 19th, that high was 1657. So if it closes at 1657 and a quarter, coming in here at the close today at 4:15, that will set up your reversal signal. That will set up a bounce. And where will that bounce take us to? That bounce will take us up to about 1680. Why 1680? Excellent question, I think. 1680 because it's nothing more than the sweet 618 retracement off of the high. Off of the high from where? August the 5th. That's where the high that we're looking at 1705, now down to yesterday's low. The 0.382 level, the dead cat bounce, that'll take you to about 1065. The 1065. That would be a trip, wouldn't it? That will take it to 1665 out there. So that would be the no-brainer bounce out here. That'll also run right into or just slightly above that 9-period exponential moving average. If you're looking at those the two squiggly lines, I should say, on my screen out here, the blue one is the 9. The red line is the 18-day exponential moving average. That's your lagging indicator. You can see price is well below that area, but the number that you're really paying attention to today, the one you want to write down on your pad, at least as far as Steve-O's son is concerned, you get a close above 1657. That's what will set up a move to at least the top of the channel. Doesn't necessarily have to get up to 1680, but that really becomes our target out there. Now, that is on the daily chart. If we go over and we take a look at the 30-minute chart here for the ES Mini, we can see that what the ES Mini's been doing here for a bit of time, going back to the time frame of August the 16th. What is today? The 21st? So for about the last 5 days, it's also now been trading in a consolidation range, a 14-point consolidation range. If it busts through the top, which I don't know that it will, quite frankly. But if it did, 1653 plus 14, what does that get us to? About 1667 out there. So that really becomes your target line. But first, it's got to bust out the 1656-ish level. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not really much change here in the futures market. So let's go check out the Dow. Let's go check out the week link out here, see what it is doing. We're going to focus really on the daily chart out here just to get a little bit of the bigger picture. Now, what we can see here, on the way down, the last time that any kind of bulls were in place here was actually on August the 7th. Now, August the 7th is a hammer candle. There was enough of a move down off of the highs here from August the 2nd to have formed a hammer candle. Now, what we know about a hammer candle, it's one of the most bullish reversal one-day signals that you can find out there, other than an island bottom reversal. I would say island bottoms, which really aren't candlestick patterns out there, but a single one-day candlestick pattern is going to be your hammer candle out there. And that's going to be an area where you're going to be able to identify significant support. That's why I said the FTSE, formed a hammer yesterday, and so we're going to go take a look at the FTSE here. Maybe it's during the next segment, whenever I am able to get to it, but we're going to take a look at that hammer low, because in the FTSE, well, in anything, when you bust a hammer, what happens is, if you're long, you're wrong, because the bulls ought to rush in there and support that. And last time we saw that in the futures was on August the 7th. The price out there was $15,375. Now, when you break through that, you're going to run down to the next area of support. And that's really where the Dow futures is at right now. Not just because of the swing point, and that's one way that you're going to take a look at it. You know, a first move up or down once you break through a support or resistance level. In this case here, breaking through a support level says you're going to go rush down to the next swing point. Well, it's even more important when you're rushing down to the next swing point. It happens to be the last time that you saw the bulls. And in this case here, July 3rd, was the last time on the move down where we saw a bullish reversal candle. That was a bullish engulfing that took place on July the 3rd. Now, didn't take much to engulf the prior session because it was a small-bodied candle, but nonetheless still a bullish engulfing. That says that support here inside the Dow futures is 14,751 to the bottom, and on the top side, 15,957. Guess where it's trading right now today? 15,951. So it's trading right inside the candle where it should find some support. Also, just a little bit further down than where it's been able to reach so far this morning, 14,904 is your 0.618 retracement level. So it would not be unusual for the Dow to push down to 15,904 or even, and more likely, go test that 14,751 level, and that would be your July 3rd low. Now, if it gets down there, 0.786, that retracement level not much further below 14,715. Yesterday's candle basically did nothing for us inside the Dow futures, or did nothing for it inside the Dow futures, other than just simply not just break the channel line, which it did that a few days ago, but it also really broke what I would consider to be the only real trend line that was out there off of November the 16th, using the November 16th low, which versus the body, which was at 12,434. And then the next one that I would use would be June 24th low, significant low 14,474. So that's on the Dow futures. We'll have to pay attention to that, but that's been the real drag on the market. Now let's go over, and because I've got some time here, let's go over and we'll take a look at the FTSE. Now, what the FTSE did yesterday, we were talking about how it had formed the 1.2728 to B equals CD down. I'm going to go ahead and take that off of my screen just to make it a little bit clearer for you so you can see the candle. So yesterday's push down inside the FTSE also brought it down to the 0.382 retracement level. That's a 0.382 retracement level after forming that Gartley sell pattern. That was a 0.786 Gartley sell pattern that formed on August the 2nd out there. If you go from the lows, which in the FTSE is also June 24th, up to the high on August the 2nd, what you will see is that at the 64.39 level, that gets you to your 0.382 retracement. Well, as it was forming yesterday's candle, it was a hammer candle. Now, what we've seen here in the markets, and this is good because we're dealing with one world markets here. So far, the session today tested that hammer candle, and it held. Tells you where the bulls are most certainly hanging out inside the FTSE over in London. If we go take a look at that Nikkei, I did say the Nikkei closed up just slightly. No bullish candle, almost more of a doji-style candle, even though the Nikkei had closed up, what did I say, it was about 27 points out there. Close enough to be, in this case here, because we're dealing with an instrument that's at the 13,004 level. But what it did do, well off of its session lows, right, to close almost where it opened, because the low was 13,250, closed at 13,424 out there. That says that 0.618 Gartley buy pattern is still in place out there. And that is really important, because we're not sure whether it's that Gartley buy pattern or it's the larger one that forms at 11,672 is the number. But we want to be paying close attention to this. Why? Because when you take a look at that A to B leg, what a Gartley does, that sets up really the C point of A to B equals CD. In this case here, it's A to B equals CD up. We want to be all over the Nikkei when it gives us the signal. Yesterday was not the signal, though. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 36 points. Trade out at 14,965. S&P down 5 at 1647. Composite off 6 at 3607. Russell 2000. Boy, that was the strength in the markets yesterday. Off 4.5 points right now. Trade out at 1024. Google up $6. Apple up 3.5. Microsoft up a nickel. Intel up a penny. Cisco up 10 pennies. Leader in the clubhouse to the upside. Insight Corp, INCY, is the ticker symbol. It's up 24% out there. I guess they got a positive result on a phase 2 trial out there, so a nice 24% pop in that stock. Google just behind them, up $7 right now. Apple up 4. Diamond Foods up about 15% this morning. DMND, I recall them being a company that was getting hammered a while back. Looks like they're out with numbers. We'll go take a look at that stock chart, see what it is doing. Lowe's, LOW, the ticker symbol, up 4.5% this morning. To the downside, you've got Staples, SPLS, off 11% this morning, down about $2. We'll take a look at them. AEO, American Eagle Outfitters, they're off 10% this morning. PetSmart off about 0.5%, down $1. Target down 2% off $1.40. What else? Netflix is off $1.37. Our call number 877-927-6648. Let's first go peek in on the currency markets, and we'll go take a look at these stocks here that are popping and dropping. We're going to start off with the Queen. Let's go take a look at the euro. It was trying to break out, still is trying to break out above the swing point from June 19th, that level, 1.3415. Yesterday, where did it close? It closed right at 1.3416 out there. It's not exactly a breakout, but it is trying to bust through that area. You know, today's candle, albeit a little bit red, not bearish here yet. We need to close a little bit further into the bar before it becomes a piercing candle out there. We'll see how this plays out here in the euro. It's got room to run to the upside. It is neither overbought nor oversold, so this may not be the end of the move higher inside the euro. Let's go take a look at the other currency pairs as well. Let's look at our favorite, the euro-Japanese yen. That formed that Gartley buy pattern. Now it has made its second move, which was to the 0.618 level. I did that by forming a little shooting star candle 2 sessions ago. That says, now the shooting star, that's the cousin to the hammer. Shooting star is going to happen as a market is moving higher. That says that resistance, and we see that resistance has been tested, 131.02. You get it close above 131.02, that says 131.70. If you're bullish, that's what you want to see, is you want to see this currency pair get above 131.02. Right now it's trading at 130.65. No bears in sight here inside the euro-Japanese yen. Again, we're looking at the daily chart. Why is this important? Because it's that currency pair that tracks the U.S. stock market better than any other currency pair out there. Let's take a look at the U.S. dollar. Japanese yen, that had formed a point, close to a 0.786 Gartley buy pattern. It did that here during the trading session of August the 8th. You got a nice bullish confirmation of that on August the 12th, little bullish engulfing candle. And now let's go take a look at its moves. We're going to go from the high of July 8th down to the low that came in here on August the 8th. And what we'll see is that the first move, that's over with. This says the U.S. dollar, Japanese yen wants to run up into about the 99... I got this, we're going to call it about 99.32 or so. That's where it wants to run. That would be your 0.618 retracement. That is at least the next level that it wants to run to. Let's see what other currency. How about the pound? Let's go see what's going on inside the Great British Pound, U.S. dollar. You know, we had identified this A to B equals CD up pattern. It is coming close to completing it. That's the 1-to-1, I should say. That is off of the lows out here on July 9th. The high, the B point, that way A point was the low of July 9th. That level, 1.481. The high out here coming in on July 25th at 154.3. The C point here, if we take a look at that retracement, let's go measure that because it looks like less than 0.618. It does. That is suggesting here that we may see the pound try to pound its way up to about the 158.9 level. It's going to first have to clear the swing point from June 17th, but it has or is very close to completing the 1-to-1 A to B equals C. That number was 1.5723. It's been up to 1.5700, so very close. And now it has a little bit more room to run before it gets into a overbought condition. So it ought to at least, I would say it should at least, because it's trading into that June 17th candle, just like the euro, it should go test the high of that June 17th area, which is the swing point, which is 157.50 out there. That is on our Great British Pound. Let's go check out some of these stocks here that are popping and dropping in the market. Let's go take a look at this Insight, INCY is the ticker symbol. Let's go see what it is trading into. A nice pop, a big, huge gap up this morning with volume in this. Let's see if this is trading into a downdraft or anything. These stocks, oh no, this is at all-time highs out here. Let's put this on a little longer-term chart. Let's put it on a weekly chart. So this stock, this stock looks pretty good. So here is, looks like maybe a biotech company and it has not reared its head. Now, if this thing ever does fall out of bed, here's where it's going to fall to, which is dangerous, which is about $8. It's right now trading at $33.90, and it is off to the moon. If we take a look at expansions here, let's go see what kind of expansion it's making. Just this morning here, making the 1.618 expansion up at the 33.98 level. That's off of its most recent swing point high, which would take you back to the July 13th time frame, 26.30 down to a low. This is how you're going to calculate your 1.618 expansion. The low that came in down on November the 2nd out at 15.43. So not a bad-looking stock chart at all. Let's go take a look at Staples. That is the leader in the clubhouse to the downside. SPLS is the ticker symbol. They're off 12% this morning with volume, gapping down into the 200 period exponential moving average. Last time that it was down in this area was back in April of 2013. Now, in one full swoop, it's gotten down into the oversold territory, but you've got volume coming out of this thing. Only been trading for, 11 minutes, already 8 million shares. So I don't know that the 200-period exponential moving average is going to stop the descent here of Staples. Boy, that is volume off of the top, too. Let me take this and let's see if, let's put this on a weekly chart out here. Okay, so it's not really at all-time highs. In fact, if anything, we take a look at a trend line. Let's go see if it had broken this trend here. How about that? How about that for a trend line out here? Now, the trend line, and we're looking at a weekly chart, folks. We're going all the way back to March 5th, 2010. This equity traded at $26, even Steven, one of Basil's round number highs out there. Once it did that, it had formed a nice, big, huge evening star, bearish engulfing the whole kit and caboodle. Now, the next portion of the trend line that we're going to hit, really two candle sessions, this little doji. This is a weekly chart we're looking at on January 7th. The high of that was 23.75. That also happens to coincide with hitting the high several weeks later on January 28th at 23.60. That becomes your trend line. What did Staples do? Staples made a move up into that trend line, closed really right on it on August the 2nd. Then you saw, a little bit of a doji candle. Doji candle means what? It means the market is getting tired. That doji high wave-ish type candle is the high wave candle that actually took place the following week, last week on August the 16th out there. Tells you that price is starting to get a little bit tired. Now, those were small-bodied candles inside of the body of the prior session, so didn't give you a reason to sell. It gave you reason to tighten up your stop. It gave you an indication that it was tired. Well, guess what? Now it's tired out. And where is this going to head down to? Let me just refresh my screen here, make sure we've got all of the accurate and live volume bars out here. Well, you can see this high volume, but lack of wide price spread out here inside Staples. That takes you to February 22nd, 2013. So that high is 1348. Let's go put this across the screen. So that would be if you are in this equity, here's the areas of support that you would be looking at with this thing gapping down. And really that level of support being confirmed here by two volume bars, two high volume bars out here. Remember, we say when something falls out of bed, you need to know where those volume bars are to the downside. In this case here, if you take a look at also the week of August 17th, there is wide price spread. That was unfortunate wide price spread to the downside, but nonetheless, 151 million shares, and the high there is 1362. Staples should head towards that area. And that area can be anywhere from, we'll call it 1362, down to the evening or the morning star formation candle, which would be the low of April 26th, which is about $12.26. It's trading at 1462, but it had volume coming out of its balloon, and it just shows you the importance of understanding trend lines, channel lines, and all of the above. Let's go take a look here at American Eagle Outfitters. AEO is the ticker symbol. They are trading to the downside by about 10%, gapping down. I see this is the third gap, but it's not the third gap down, so not a three-gap play here. So American Eagle Outfitters, this thing had broken a level of, this thing had closed below a area that should have supported it, which was a nice breakout that took place here. We're looking at the daily chart, May 2nd of 2012. Now, it broke that area on, looks like a lighter volume, but let's take a look at it. The volume we're benchmarking here is May 2nd, 2012, 26 million shares. That was a very nice breakout. It came down here. No, I take that back. It came down right into that area with 5.5 million shares. Yes, lighter volume than the breakout of 26 million shares, but folks, let me see. Was that did I get the correct volume here? Let me make sure. 22 million shares. I'm sorry. Came back with 22 million shares into that breakout area. That was spelling trouble, and now we're truly seeing the trouble here with its second gap down. I guess this is even if this were to, even if we use, I can see three gaps here. Even if we were to consider this the third gap, it's smaller than the previous one, so it's not a three-gap play out here. So where is it that American Eagle Outfitters is headed down to? Well, let's take a look at a weekly chart. Let's get a better view of this equity here on a weekly chart and see what it might be headed into. AEO, again, is the ticker symbol that we are looking at, and we're looking at a weekly chart. So right now it's trading out at $14.84. And if we look for the next swing point out here, well, number one on the weekly chart, this is not a hammer candle, by the way, not enough of a downtrend. I'm looking at the candle session from April the 13th out there. So that is not our hammer candle. What we are looking for is really right down in here is the next set of swing points and where we saw the bullish candles. You saw really two bull sash candles out here. You saw the one here from the week of January 20th, 2012. You would have this one right here from February 17th of 2012, and then you have this bullish engulfing candle from March the 2nd. So this is the area here that it's going to move down into. If we take a look at, is there any volume there? You have this little downdraft, which it's trading into the top of that session from January the 6th. That had volume there on the weekly chart of 45 million shares out there, but this thing is gapping down with volume today. Now, I can't tell whether it's going to have the volume to bust through that area, but it closed below 1477. Here's what I can tell you. It's at 1476 right now. It ought to come all the way down and test the swing point lows from January 13th, about $11.97 out there. So this is American Eagle Outfitters, and it is most certainly struggling. Let's see, what else do we have to look at here in the markets that is moving? PetSmart. Let's go take a look at PetSmart. PETM is the ticker symbol. I just lost that. Okay, let me pull this up here. So PETM, always amazing to me. You got a big old, a lot of overhead inside a store just allocated to our furry friends out there. But let's take a look and see what the stock chart is doing. So we're looking at the daily chart here, moving down with volume, but so far it's holding the low, so it doesn't look to be too bad out here inside PetSmart, at least not at this point in time. Here's the danger zone, though. If this thing does fall out of bed, it is going to head all the way back to the March. Well, it'll give you two areas. Number one, the swing point low, which has not been tested, is March 7th, and that is $61.30. So that's another $12 down. Doesn't look like that is the type of move that is underway here today. But if you are in this equity, you got to be aware of that. Now, the ascent could stop right here at around the top of this bar, which is January 28th, right around $68. So maybe if this continues to move down, that'll be the first place that it would test, and that is going back to January the 28th out there. But so far, not too bad. Volume so far in the equity off this move here, 362,000 shares. The last sign of any kind of sign of strength in this thing on a daily chart. Boy, it takes you all the way back down to June 21st. How about that? Not June 24th, but June 21st out there. So that's in PetSmart. I would say just be careful if you're inside that equity because of the fall all the way down to that high volume low bar on March the 7th out at about $61.57. If you're in the equity, just simply tighten your stops out there. Let's go check out let's go back here and check out the ES Mini, see what it is doing. And we go to the 30-minute chart out here. Looks like it didn't get down low enough to pick up my trade here. I did have a open trade out at the 1642 and a quarter, which is right above the bottom of this consolidation area. So that's where I was looking to be able to pick up a trade here this morning. So far, the low at the open, it got down to 1643.50, so off by a point and a quarter. So be it. I'll just now wait for the short side of the trade, the top of the consolidation zone. 877-927-6648. Be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow right now off 34 points, S&P down 3. NASDAQ is basically flat. Russell's off 3 points. The NDX 100 up 1.5. But really the big thing to be paying attention to, I realized during the break here, the leader in the clubhouse on the way down here is the New York Stock Exchange. It's off 0.4%. So it is leading the way down. It's off 38 points. You got negative, you've got a minus 1,232. So you got net declining issues out here. Declining issues outpacing advancing issues by almost 3 to 1, not totally, about 2.8 to 1 or so out there. That is not positive news. That was the first piece of information that I saw as soon as we were going into the break. A second piece, which is even worse, quite frankly, is if we take a look at the volatility index, the S&P volatility index, the VIX, it is up 80 cents. It's up 5% this morning. It is well above the 50-day exponential moving average. The number there on the 50-day, and you can expect a volatile day for sure. Uncle Ben, the minutes released are at about 2 to 2:15, so expect to see during, let's see, I believe that is during David White's show. Yes, it is. So expect during the power trading hour for things to be a little bit volatile in the marketplace. But if the VIX is any indication of what's to occur, now all carnage in the markets is done when the VIX is above the 50-day. Gapping up this morning is not a bullish sign at all. It is a real bearish sign out there. And so be careful in the market, because we're seeing now 2 leading indicators here that are suggesting that the way that the market's going to respond to the news, not the news, but to the release of the minutes, really is to the downside out there. So be very careful. I may, if the market does pull back that 1642, I may have to rethink whether or not I really want to enter that and play that consolidation trade inside the market. In any event, I don't have to worry about that for the moment. Now, as far as yesterday, we did see there was a New York Stock Exchange that actually had some nice signals yesterday that the market did want to bounce, but we're not seeing that follow through this morning. What would be needed today? Let's say the market, say that the VIX here is wrong. Let's say that the early open inside the New York Stock Exchange is wrong. Let's say the market responds well to the Fed minutes out here. Then what you want to be paying attention to is for the bulls to actually take control of the market, take control back of the markets. What you would need is 3,081 net advancing issues. If I total that up here, I don't even know that that's really possible today. It would be really, really close, although I don't know that it's totally possible out there. But that's what it would need, 3,081 net advancing issues in the marketplace. So that's what you want to be paying attention to today. If you're intraday trading, you want to take a look at the support and the resistance zone inside the ES mini, in my opinion. That's going to be the consolidation range that is traveling in. Somewhere between 1642, 1653 is an area you've got to be paying attention to, as well as 1656, 57. A breakout of that area, folks, and this is where you can really use this consolidation zone. We were taking a look at the 120-minute chart a while back, and meaning last week, I believe it was, and we saw that was a projection of that was a 23-point consolidation move. And when we saw the break of that, which was to the downside, that's where on these consolidation patterns you can play continuation. You don't even have to be inside the trade. You can go ahead and you can enter when it breaks to one side or the other. If it gets back into consolidation, you close out your trade, you take your small loss, and you wait for further information out there. But you've got a 14-point break one way or the other. Not saying it's going to happen today. I'm saying when the consolidation zone breaks, that's what is set up now inside the ES Mini. So, folks, it is Wonderful Wednesday. If you're off to start your day, have an incredible day, and always remember, you have an amazing power within yourself, and that power that's so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great morning, a great day. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.